Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. It's never too late to protect your wealth, and today we've got a lot of stuff happening in the world that says today is the day that you should start considering that as an option. Of course, here at Guildhall Wealth, we deal only in physical precious metals, as well as natural fancy colored diamonds, a topic we hope to get to a little later in the show. Some really interesting things with that one, Jerry. Wait till you see what I found online with regard to a natural fancy colored diamond. And but first, and then also later in the show, we've got some topics, specifically debanking and unbanking, two relatively new terms you probably haven't heard about that we should define. What is unbanking and what is debanking, and we'll get to that as well. But first, let's talk about some updates. What we saw recently in the past week, Jerry. I'll start off. Did you see that the Rothschilds are auctioning off their wealth?
Could you believe that?
I couldn't believe that. It was a pretty good one, though.
New York Post. You got to check that out.
Let me just find that post. They basically, I mean, I have never ever heard about the Rothschild.
You don't sell your heirlooms.
Liquidating assets.
No.
Well, what is that?
Well, that's another rabbit hole, Jeremy, we can delve into, but we all know who they are.
Okay.
What they own. Their involvement in banks. Hard assets. But the timing of all of this, I think that is what is most exciting.
To me, it's just this idea of what do they need to sell anything for? I would assume that everything that they own is sort of a historical artifact at this point. But a vast collection of their art, furniture, silver, ceramics, and jewelry long held in a private collection are going to be sold for as much as $30 million this fall at a Christie's New York auction. $30 million is not a lot either.
No.
Typically, in the real world of people selling $30 million worth of stuff, it would probably entail that you need the money. I don't see why they're making this move. It's one of those curiosities. It's just really one of those curiosities.
I think we'll be hearing more.
You think there's more to tell on this one?
Likely.
Well, speaking of,
whenever you think of liquidations, you think of what came to my mind was a crypto company. What they do is they just seize the crypto and they sell it to market. That's what it felt like to me. I don't know if it was seizures, but you know what? 50 million is nothing.
Oh, I don't know where to segue from this one. You just teed up FTX because there's some news. There's some news on that. Well, let's talk about treasure. So they're selling off some family treasure. Did you hear about the man walking with a metal detector found a cache of gold dating back to 500 AD?
That guy's a winner, and he's a Norwegian, right?
Yeah,
winner. I want a metal detector. I'll be that guy.
Well, I don't think the metal detector actually finds. I don't know if they actually calibrate to find gold. It must have been what it was contained in or something.
We'll walk around with our gold purity tester.
My wife and I were watching, for whatever reason or other, we decided to watch Titanic, the movie. I don't know, maybe it was the sub thing. I don't know. So we're watching it, and do you remember the first scene in the movie?
Not really.
Okay, the first scene in the movie is they pull up the safe from the wreckage, and the guy's all excited. They crack open the safe, and then they're disappointed because all that comes out is a bunch of mud. Because what they were really looking for is an asset that if in the vault there in the safe would still be in perfect condition, which in this case was supposedly, I guess, the Hope Diamond or something like that, right? Or something along the lines of like a Hope Diamond. And I'm looking at that going, yeah, exactly. If there was actually gold in there or actually diamonds in there, that would be worth something. But stock certificates, no, they're not going to be worth anything inside of that. And it just reinforces this idea. And same thing with this Norwegian. We're talking about a valuable from 500 AD in perfect condition in the ground. I mean, if you don't think that gold and silver are a store of wealth after hearing that about something that doesn't erode, doesn't corrode, will just sit there and store the wealth for thousands of years, I mean, you should just turn off now.
Exactly. And further to this, to the story of gold, to the case for gold, this was found in Norway, which would be just as good in India, which would be just as good in Canada, China. That would be valued anywhere, which is one of the tenets of why gold, and why gold is money. It's recognizable beyond the borders, beyond the languages, beyond the creed, beyond the everything. It is valuable here. What were they, in fact? Were they just artifacts or coins?
Yeah, they were coins.
Oh, nice.
I mean, I guess you'd still have to check out what they were specifically and do the research on it. But apparently it really was the find of the century. And you still hear about these all the time. I remember they found some in Israel a few months back. It just kind of continues over and over. So the next one I wanted to talk about was this FTX. Did you hear about the FTX? The new guy with the FTX? Ryan Salame, the ex-FTX executive, will plead guilty to criminal charges, including donating $24 million of stolen customer funds to U.S. Congress and campaigns. That comes via Bloomberg.
I saw the headline, didn't go into it, but wow, what if I was a customer of FTX? He used my deposits to fund the campaign of a political party?
Yeah, now I do believe, I remember that they were saying a judge ruled that the politicians had to give the money back. And you and I were talking about this, saying, but if the money gets spent, how do they give it back? Right?
Where does it come from?
Like, did they get back all the money from Bernie Madoff? I don't think so.
Yeah, they're
right?
doing a lot of car washes.
The Ponzi scheme, they took the money, they spent the money, and it's gone. Like, you're lucky to get back something at some point. This is, with regard to a gold perspective, this is the whole point of if you can't hold it, you don't own it. You want to actually have the asset that you have ownership of, right? Doesn't necessarily mean that I keep it under my bed, that analogy we like to use, because at some point you have to physically store it to insure it and secure it. But the point is that if it's fully allocated, fully segregated in your name, you have the ability to go and personally audit the holdings. You can take delivery anytime. All of these sort of criteria that we meet at Guildhall allow you to say, I have pure ownership of this. It's held in a vault outside the banking system. This cannot be taken by anyone. Mm-hmm. And anyone that did, if that was the case, you actually have an insurance policy for that. That's why you're paying storage and insurance. That's what they cover at BRICS, for instance, is the only way that this disappears is if someone actually, and you should see the security that they use for BRICS.
Yeah.
To make sure that nothing happens to the metals, not just the strength of the vault, but the procedures, right? Mm-hmm. So there's that. Ironically, $24 million, by the way, is close to what the Rothschilds are auctioning off.
All of these correlations makes you just continue to scratch your head.
Yeah, there's someone out there selling. I mean, we've seen diamonds sell at auction for $100 million and $80 million. Much more than what the Rothschilds are auctioning off. Again,
probably holding their color diamonds.
To beat the dead horse, it's just, what is this? What kind of news headline is this? Are they forced to do it? I mean, sell off a few trinkets. We need an extra 30 million. I don't know. It's interesting. The other bit of news I wanted to get your opinion on, Jerry, was out of. Well, there's a couple. Actually, 21 countries have officially agreed to ditch the U.S. dollar in 2023. We could talk about that one. But the chief of the United Nations is basically saying there's going to be economic and financial changes to the system. I thought that was a pretty big one, if you ask me.
For that statement to come from the UN, above all, it was definitely a very interesting statement. We've heard them they've chimed in before, stating that stop the interest rate hikes. You're killing people in the third world. You're making the emerging markets very unstable. So they're getting into the economics now. They're wheeling the UN in now to talk about the rate hikes and the costs of and the interest. So. It's definitely changing. The landscape is changing. The de-dollarization is a result of the weaponization of the SWIFT system, of the financial system, the U.S. dollar. Controls are shifting. And I think with the controls, the major shifts are going to be the way things and assets and resources will be priced. Because you no longer, first you lose the control of the US dollar being used in all trade. But the system's still in place. You still have the same US controlling the prices of cotton, gasoline, the COMEX silver and gold prices, where they don't mind gold and silver in New York, do they? They hold some, but they don't do the work.
So do you think that a comment like this from the Chief of the United Nations warning that the world risks a great fracture of its economic and financial systems is not so much as a warning, it's kind of doublespeak to say we're worried that we're losing control?
It's part of the mainstream narrative of trying to discredit the union and the alliance that the BRIC nations have. They've already established the relationship. It's a done deal. How? Sure, some of these nations may have not got along in the past, but when you when you receive the same negative treatment as, once an enemy, you become partners, especially when you ground the foundation of your relationship with the very asset that you understand, which is gold, which is assets like oil. These are very important assets, and these are the very assets that they have hordes of, that they have control of, and that they export to the West. So there's a mechanism of control. You maintain, you just recaptured the control. You got independence back for yourselves. So another thing of, they're not really, they're divided. This is the fracturing of what the UN is talking about. Is it's going to cause problems. We're all fractioned. No, they're not. There's an alliance, and you're on the outside looking in. That's what's happening. So
it could be more of a warning that we're worried about losing control.
100%.
The number 18778-SILVER, the website, guildhallwealth.com. More to come here on The Real Money Show on 640 Toronto. Welcome back, Real Money Show, the number 18778-SILVER, the website, guildhallwealth.com. If you're looking for a way to protect wealth, we're not advisors, financial advisors. We only deal in physical precious metals, which are not equities. They're just personal use items. They're assets that people hold. Over the last 20 years, gold has increased in value close to 400%. Silver, I think, is in the 350%, and that's in Canadian dollars. And if we do think about a larger picture here, this is about the fact that gold actually doesn't do anything. It's becoming more expensive in Canadian dollars because the Canadian dollar is losing value, right? It's losing purchasing power. And we see that in inflation. We've talked about inflation for a long time. At one point, it was quite stealthy. Now it's become quite overt. And so now we see that the central banks and governments have to employ policies to try to tamp that down, as it were, Jerry. What's the update on the Central Bank of Canada this week?
So the big meeting was this week, Wednesday, 10 a.m. The Bank of Canada rate statement came out. Bank of Canada kept the interest rates. They stood pat at 5%. Did give a speech that it sounded pretty hawkish, but as a result of the pause, the Canadian dollar fell to, I think it was a few weeks low. The loonie fell off, and it was actually praised by many people in the real estate industry. A lot of relief could be seen. Could this be the end of rate hikes in Canada? And definitely a lot of Canadians, specifically a lot of politicians, would love to see rates getting cut. But then the following day, so after holding rates at 5% on Wednesday, they came out the following day and said this: the Bank of Canada says interest rates may not be high enough the very next day. So they paused, I guess, just for a show, just for a little bit of easing some of the tension. But they're saying we're good. We have more to go. So the Bank of Canada governor, his name is Tiff Macklem, and he also gave a speech, and he commented in saying, guess what, guys? The federal and provincial government spending is not helping to relieve this inflation. So he stated the obvious, which was, hit myself on the head. The statement was so obvious. The deficit spending creates currency out of thin air, which is the cause of their inflation. So the solution would be to stop deficit spending, get to work, and let's get things going. Let's become energy independent. There are so many solutions that the Bank of Canada can adopt, especially sound money. Jeremy, your thoughts on the interest rate hikes?
Well, I think you were just talking about the fact that the deflection from the Bank of Canada to say, your government spending and also taxation is actually inflationary, and it's running counter to the Bank of Canada raising interest rates, trying to keep inflation under control. It makes me think about a quote that I read recently, and I just pulled it up here while you were talking, saying, "The biggest scam in life is paying taxes on money we make, paying taxes on the money we spend, and taxes on the things we own that we already pay taxes on with already taxed money." And, you obviously, if the government is going to sit there and continue to spend money, then they're never going to get inflation under control, and they're going to continue to blame the public for it, and they're going to raise taxes on it, which is doubling up on everything, right? Because your prices are going up, and then you're taxing, and so you're getting more tax on the higher prices. But things are going to fall apart. Now, I don't think the Federal Reserve or the Bank of Canada, I think they're going to have a trouble dropping interest rates even in a crisis. And I think it won't matter.
Yeah, there's argument.
We don't know. Nobody really knows. Let's move on. Let's talk about.
I think we should.
Okay. Let's talk about debanking and unbanking. Jerry, can you tell us a little bit about the difference between the two? Because these are brand new terms.
Yeah, definitely something that we're seeing a lot of people do in response to a lot of the things that are happening, especially in the banking system, the currency systems. Over the past few years, especially, we saw a lot of people undigitize and unbank. There's a lot of de-dollarization and undigitizing your wealth happening already, but unbanking is what it is. It's generally unsubscribing. And Canadians and Americans and global citizens are getting their money out of the banking system. JP Morgan, for example, has seen the most amount of money. About 25 of the largest banks are seeing lower lows in deposits in the U.S. and in response to FTX, as a response to the weaponization of the banking system potentially. Maybe overprinting. We're seeing a lot of inflation. They released 40-year high inflation.
Yeah, I would.
And now they're raising interest rates over and over again. We're now seeing bankruptcies happening. Bank accounts are being ravaged. The savings are being ravaged. So people are unbanking. They don't want to participate in the system. They don't want to even participate in keeping the money into stocks, maybe Vanguard or these Black Rocks. This is what people are telling us.
So you're saying on the one hand, it's unbanking in terms of a fear portion, worried about the stability of the financial system, because we've seen it before with the great financial crisis in 2008, and nothing got solved. So we're hurtling towards another financial collapse. So there could be a bit of a fear trade. Then you're also saying there's inflationary reasons keeping up, that you could be dipping into savings. That could be another reason why people are also withdrawing funds. And then as well as inflation, which is interesting because when the interest rates were at zero, you had to chase yield. Now that they're at 5%, you still have to chase yield because even if you're getting 5% on a treasury or whatnot for 5 months or 3 months, the fact is inflation's higher than that.
The real rate
is more than that. So you have to again chase yield. But what if you don't want to chase it in stocks that are already overvalued because of the low interest rates? Where do you turn? So I suppose a lot of that is coming into the precious metal market, and you do see that. You do see physical metal being pulled off the exchanges and going into private hands. Yeah,
we're seeing that. People want to, when the trust and the credibility is just shot, it's very difficult to get that back. It's very, very difficult to get the money back into the very system that you don't trust. And this is developing. This has been a trend of de-dollarization and now debanking and unbanking rather. Now, debanking, on the other hand, is what we're seeing when bank accounts are being closed, when banks are closing the bank accounts for individuals for maybe participating in a protest, maybe, and this is, we're now seeing the entrance, the third day for Tamara Lich with the convoy, the Ottawa convoy happening. So I'm paying attention to that. I'm very invested in that as well. I like to see what's happening and developing in there.
I think the biggest sort of figurehead of debanking right now would be Nigel Farage, a politician out of the UK.
Him especially, yeah, that's right. He was just an opposition leader, right? He had very strong views, and they closed his bank accounts. And this is how they treat the opposition in leadership in Parliament. This is very dangerous in my opinion, and people have taken note.
So is that similar then to the social credit score in a way? If you're not espousing the correct views in certain countries, they basically cut you off from your ability to spend money. Is that similar, or is this a step towards that?
Yeah, I think that's a step towards the creation and implementation of the central bank digital currency idea. But again, it's an idea. I think it's a total failure, simply because people are just not going to participate and subscribe to this.
Now, there was some news this week talking about a kind of a version of debanking with regard to mortgages, I believe. Is that right?
Yeah, that was a great article that was brought up by a great Instagrammer, IG guy. You guys got to follow him. Is at Daniel Folk. He was on IG. He talked about this trend that he's talking about. He's a real estate guy, and he brought up a really good article from last week from BNN Bloomberg. Mortgage growth buckles under weight of rate hikes in Canada. And his chat was very quick and succinct and really talked about the changing in the banking industry, specifically due to mortgage growth. Year over year, mortgage growth is down. Lenders are losing money in the mortgage space. A lot of low growth, which is what we're seeing in a stagflation environment. But he pointed to some of the further changes that some banks are doing. And some banks, this gentleman from one of the big banks is talking about, we're being more efficient with regards to the use of our capital. The strategy has been improving this bank's net interest margin, and what they're doing is they're using customer deselection at renewal. So they're deselecting, they're saying, we're not renewing, go find another bank. And this is another measure that I think is very alarming. This is part of the trend of debanking, I believe. Your thoughts on this, Jeremy?
So just to be clear, you're saying that, or rather this article was saying that in some cases, there are people who at the renewal point on their mortgage are being told, we don't want to renew your mortgage here. Yes.
And now this person basically was saying that the strategy has been improving the bank's net interest margin. So if this particular mortgage was considered maybe a stage 3 loan or an impaired loan that made the bank's balance sheets look bad, then they would have to deselect this client and kick them to the curb.
Well, I think it's a very interesting development in the mortgage story.
Canadian banking story.
My personal belief, and I've seen stories on Zero Hedge over the years, that I think that the banks fell into predatory lending. I think the lending got really loose. I think that as interest rates came down, how do you make the same amount of money? You lend more. And so they would just start saying, okay, we're gonna let people borrow more because interest rates are low, not thinking the long term, the long game, thinking about what could happen in 10 years if interest rates did go up and could the client handle it. So I think that the regulatory side of it got fast and loose. I think now that debt has become more expensive, they're now dealing with the fallout, and they're not going to take blame for any of this. They're just going to deal with it. And I think that perhaps a lot of these banks now have a lot of moving towards a toxic book. Mm-hmm. And so they're going to move to very quickly get rid of some toxic things as they can. And I feel like that, unfortunately, for these particular mortgage owners who have to renew, that they become collateral damage in this. Mm-hmm. I don't think it's ultimately, I think that whether it is debanking or unbanking, I don't believe that the banking system as a whole is going to disappear. I think these banks are the biggest banks, longest standing banks. You can bet your bottom dollar that if anything came to a head, they would be bailed in. Depositors would get their money. We can talk about that in another segment. But I think that we're going to go through a lot of changes.
Mm-hmm. I couldn't agree more.
And I think that it just makes sense to be defensive here about what you're doing. And I think that both situations are leading to a place that says, if you have the wealth, why would you keep it in the bank at 0%? And if you're getting 5, you're losing to inflation, when you can see gold has kept up with inflation, silver's kept up with inflation, diamonds have kept up with inflation, many things have kept up with inflation. And then, of course, unsubscribing, as we've talked as well, is a way to say to the bank, listen, I didn't like your lending policies. I don't like how you're dealing with yourself. And if you can get your act together, right, and offer me something, maybe I'll come back. Mm-hmm. Last 20 seconds on this?
I agree with you, Jeremy, with regards to the banks. I think that this is a response to, these measures of deselecting. They may not be a debanking. They may sound the same, but really what it comes down to is, yes, the loose underwriting. They didn't do their homework, and they were, let's get this approved. Too much, too fast, and now they're paying the price, and unfortunately has to fall back on the people that have to, maybe potentially sell the property. But yeah, it definitely talks about the consequences and take ownership for responsible borrowing, if you have to borrow, but responsible money management especially at a time like this.
Unbanking, debanking. Thank you, Jerry. Have to go to break. The number 1-877-8-SILVER. The website guildhallwealth.com. Much more to come here on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER. The website guildhallwealth.com. Jerry, I wanted to talk to you a little bit have a discussion about short-term thinking versus long-term thinking. I really just thinking a lot about this week, that we get so caught up in the day-to-day that it's hard to think about the future longer and think about making plans in a longer perspective. Let me give you an example. You get these payrolls come out, right? All these stats, and we always say, guys, these are BS.
Mm-hmm. They always get revised.
These are always going to get revised. They Zero Hedge showed what the revisions actually look like.
Great.
Okay. So the June payrolls originally were reported at 209,000. And then
jobs.
Yeah, 1 month later they got revised down to 185,000. And 2 months later, they got revised down to 105,000.
That's almost 100,000.
So the headline was, great news, right? Here's the payrolls, 209,000 jobs.
Traders trade the
right?
reaction, exactly.
Yes. And then we would say, oh, that's BS, guys. You all know it's BS. But no one cares. No one thinks about it. Right? Just like no one cared about shrinkflation. Remember we talked about that? Mm-hmm. Or we told everyone about what was going on. Then you see it all revised downward, and you can see what the real numbers look like. And you have to realize that it's not about what they say. It's not about what the headlines. The headlines can often be distraction. They can often be moving the goalpost on you, right? And you have to start thinking in a much longer term perspective. So, for example, the Canadian in 10 years from now, is the Canadian dollar going to buy you the same amount of stuff?
No.
Let's not worry about a panic, change of currency, hypotheticals aside, okay? If you stay on this path, government stops spending, they try to lower some taxes, but they keep the rates really high. Is the dollar going to get stronger, or is it going to get weaker? It's only gotten weaker over time. You can look in the past. Now you could say the future is not the same as you've got 100 years behind you to look at these currencies and say, do they get stronger or do they get weaker over time?
The Canadian dollar has lost over 96% of its value since 1915. I think the trend is very clear.
Yeah, and in the States it's 99. And they could go from 99 to 99 and a half. And that would be a big move at 99, right? Because you've already down 99, but now it's that last percent. You just lost another half of that, right? That's going to be huge. So how do you deal with that? How do you think into the future and say, I'm not going to worry about the day to day? I know we talk a lot about interest rates and all of this type of stuff, but you have to think a little longer term in how this is going to play out. And one of those things is a natural fancy color diamond, because you have to think long term with an asset like that. It doesn't move day to day. It's not exciting like a stock. It's a slow building mover, right? That we've seen over time. We know that if you go back 15 years in the color diamond market, you could see an intense yellow diamond selling for probably under 10,000, maybe around 10, or even just over $10,000.
Yeah.
And today they're selling close to 30,000.
Yep.
Right?
That's correct.
So you need to give it that time in order for it to build. Now, why is it? Because they actually are rare. Actually rare. There are things out there that you thought were rare that are not. Take white diamonds. Everyone thought white diamonds were rare. No. It was just De Beers holding back, right? They were just holding back supply. Oils could be cheap. It could be in vast supply. But they constrict it. So the price goes up because it's rare. Now you could ask yourself, who makes money on that, right? Rappaport, who does the the pricing for all the white diamonds, he came out with kind of a bombastic editorial on it, saying, look, it was great in the beginning with these synthetic diamonds or lab grown diamonds that you could get a larger diamond at a third of the price, but now the whole white diamond market is tanking, and they're still capitalizing on these lab-grown diamonds.
On
the markup. So, and of course, if you wanted to resell a lab-grown diamond, that's equivalent to selling a knockoff Rolex watch. What do you think a knockoff Rolex watch goes for these days? What do you think a knockoff I don't know, Hermes bag goes for? They don't go for anything because they're knockoffs. They're not real. We live in a world where the emperor has no clothes.
Exactly.
We got to go to break. But after the break, I got to tell you about what I found online in terms of pricing for natural fancy color diamonds. It's going to blow your mind.
Let's get into it.
Okay. The number 18778-SILVER, the website, guildhallwealth.com. Stick with us. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 18778-SILVER, and the website, guildhallwealth.com. If you want to own physical precious metals, gold, silver, which is our number one pick, we think it's got the most upside potential. 100% upside potential. Man, we were watching that video with Bix Weir, interviewed on X22. I sent it off to a couple clients. I think we sent it out in our newsletter. And he was talking about silver going to $5,000 an ounce. $5,000 an ounce. And we were texting, right? You and I were texting. 5,000 ounces is what? $2.5 million it would be worth?
Right.
Right? I mean, that buys you a lot of houses, actually. Maybe not in Toronto, but
frees yourself of the mortgages. That's right.
Yeah, it doesn't take a lot of silver, so it's definitely one of our big picks. Just in between break, you had a question, Jerry, about the U.S. dollar.
Yeah, because we're talking about the loss of purchasing power, which is as a result of inflation, everything's just moving up. Our dollars are buying less and less and less, and over time, you're going to need much, much more of that paper to buy the same good. Now we mentioned the statistics. Okay, 96% of the Canadian dollar's value has been lost. Maybe 98% has been lost for the U.S. dollar.
99.
99 and probably 99.5. But what is holding on to the value? Why is it still? What's the 0.5%, Jeremy? What's keeping this thing alive?
I think it's not necessarily value. That might be an inaccurate term. It's confidence. And what they get, and any fiat currency gets, is that they have to be used. So a US dollar has to be used. Someone wants to buy precious metals. got to pay for it in US dollars. If a grocery store is buying items, avocados, strawberries, whatever, from another country, they're paying in US dollars. So everyone has to hold this currency in order to transact. And so you get the benefit of, or if you're the US, you get the benefit of them having to use that currency, right? The BRICS are saying, no. We need to make this more equitable because you guys aren't playing fair, so why should we? That's a loss of confidence. What happens to the Canadian dollar as people start to lose confidence? How much destruction of your purchasing power do you need to lose confidence? I don't know. But I can tell you it doesn't take much, right? Confidence is even in relationships, right? Trust and confidence are very delicate, fragile things. And in a crisis, you see how quickly it can disappear.
Oh, yeah.
So I think that what's holding it up is the confidence in it and the trust in it. And that is a very, very delicate thing. Jer, I wanted to get to, what are your thoughts on that?
Very good. I think you're absolutely right. With the BRICS now moving away from the US dollar, I think that 0.5 is diminishing right as we speak.
So I wanted to get back to natural fancy color diamonds because we wanted to feature a diamond this week, which is a 1.06 fancy vivid yellow, internally flawless, and it's an oval shape. Now, oval is more rare a shape than your typical radiant or cushion cut, which is a more blockish shape. I mean, we're talking like top 10 athlete versus a top 30 athlete. It's, you're still within the top 50, but still it is a more rare shape. So I did a quick Fancy Color Research Foundation report on it. 13 to 16 oval vivids IFs come to market every year. Now that doesn't tell you if it's a long oval, a stubby oval, a deep oval, a shallow oval. Just vivid yellow oval IF, 13 to 16.
That's it.
That's it.
Less than 20.
Yeah. So probably the quality that we have at Guildhall, probably well under 10. Now listen to this. I found a similar diamond, but not IF. Not IF, not VVS1 or VVS2, not VS1, but a VS2. Okay.
So going way down there.
We're way down.
Dribbling down.
Still a vivid. Still a VS2, which is eye clean.
And it was 106?
This was a 105.
Okay.
Okay. On Tiffany's website, the jeweler. So it's in a setting. Okay. Let's be honest. You can get a setting for. You can talk to us. We'll tell you what these things are really worth. Taxes in. Tax in. 1 carat. Vivid. VS2. Tax in 82,500.
82,005.
Yeah. What do you think the 106 is going for that we have?
Please enlighten me.
Vivid IF 106, 58,000. That's 42% cheaper for a better diamond.
For a better diamond. Yeah. For internally flawless. For a little larger.
Slightly
larger. But it's internally flawless, Jeremy.
Yeah, and it's what we do at Guildhall is we actually go out, we buy the diamonds. We've invested in the diamonds. We sought out the diamonds. We look for something that we want to have in our collection, and we're seeking out things for ourselves. And then they become, then we open the portfolio to the public. A diamond like this cannot be found. The best I could do is find a VS version, right? Not an IF. So this is a very special diamond, and you should see the color on it. It's not just you think yellow, you could think of anything, right? This is like a golden yellow. It's just a warm yellow. It's beautiful. You have to take a look at it. It's on the website. There's even a video of it, which is beautiful. And hey, listen, for 42% less than you could buy at retail for an asset that, by the way, if you were to own that asset 15 years ago, you would have been paying under $35,000.
Easily. That's right.
So how about that? That's something you put away for the next 10, 20 years. Think long term of where this could be and what that could be worth. And if if they're selling it for a lesser diamond for 82,000 today, what do you think they're going to sell it for in a decade or two?
Mm-hmm. Exactly. This is the track record that Guildhall possesses. This is 20-year history at Guildhall, 21 years now of doing the exact same thing, going after the rare, putting skin in the game, owning these diamonds. We're going after the beauty. We're removing the guesswork to give you something that is of quality but economical. This is 40% less than what is out there for better quality. And this is the Guildhall difference. It's honest. We want to give you the deal, and we want to show you how to do it the right way. Give us a call. We'll walk you through a diamond discovery session to show you how you can add one of these diamonds into your metals portfolio to round it out. Why? Because just like metals, they are inversely correlated with inflation. And because we have entered into an inflationary economy, you need a natural fancy colored diamond. Maybe it's not for everyone, but if you're into beauty, if you're into rarity, you definitely want to have one, a beautiful one. I mean, summer's done. They're saying this is definitely summer in your portfolio.
Yeah, you look at it every day, you'll feel warm. Not only that, but if you're looking at that, we'll do a promotion. You'll get a 5-gram 5-gram gold bar in a necklace that's on a chain, and we'll put that in with the diamond as well. And then, of course, we can also create a setting for you. We can do a setting for you on that as well.
Still cheaper than $82,000.
It'll definitely still be much less than that. Thank
Awesome.
you for everyone for joining the show with us today. That took the time to listen. We do appreciate it so much. And to everyone who's acquired precious metals throughout the week and all of the new clients that we've met, we do have a promotion. For every 100 ounces of silver, you get the 1 ounce of silver bar. So definitely check that out online. Go to guildhallpreciousmetals.com. And Jerry, thank you very much. And we look forward to speaking to everyone next week here on The Real Money Show. The number, 18778 Silver, the website, guildhallwealth.com. And again, it's The Real Money Show on 640 Toronto.